Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
We've talked extensively about portfolio reviews on this channel, so let's take a look at what a good portfolio review actually does for you. There are 6 elements that you need to keep in mind, so let's go through each of these elements one by one. The first thing that you want to do when you have a portfolio review is to look at what your current asset allocation is versus what your target asset allocation is. This gives you a good sense of where you need to start the rebalancing activity. The second important thing that you can do when you're reviewing your portfolios is see if your emergency fund is topped up adequately. Sometimes when we have large unexpected expenses, we might draw down from our emergency fund and forget to replenish this. When we're booking profits from a portfolio review, this is a great time for you to top up your emergency fund because sometimes the profits are more than what you expected. So it's not even like you're taking anything away from your wealth creation journey. The third and possibly one of the more important things in your portfolio review is to actually spend a little time in assessing the quality and risk levels of each investment decision that you've made. When you're able to plot the quality and risk levels through a cycle of owning a particular asset, you will have a clearer understanding of when you want to enter and exit this asset in the next cycle. Number 4 is an interesting thing that you can try out, which is to take your risk profile test again at this point in the cycle. A risk profile test is a hypothetical way of you to judge your own risk appetite, but this can change as the cycle grows, and more importantly, sometimes what we answer on the test is very different from how we behave in real life. So when we take these tests over a period of time and we reflect upon what kind of actions we've had on our portfolios, we get a better sense of who we really are as investors and what our action plan should be going forward. The fifth thing that you can do is actually look at the tax efficiency of your portfolio. In previous years, investors were very worried about how the taxation would affect some more conservative investments like precious metals or global funds compared to equity investments in their portfolio. With the changes that were introduced in this year's budget, there are a lot more tax-friendly options for you to diversify out of and de-risk your portfolio. And last but not least, it's important for you to assess how you've made your returns. What do we mean by this? Look at the split of performance between how the market has performed versus how much you've contributed to your portfolio. This gives you a good breakup of whether you're doing enough in your wealth creation journey or if the market is doing all of the heavy lifting in your portfolio. This will allow you to rethink how much you want to save as well as book out profits from places where returns have been phenomenally good. If you found this checklist for your portfolio review helpful, let us know in the comments below.